It's Tuesday afternoon and the major U.S. stock averages are trading slightly above the flat line. We got some better than expected U.S. economic data releases and we're seeing the U.S. currency extend gains. Joining me this afternoon is Tim Anderson of TJM Investments. Tim, thanks for joining me today.
Well, thank you so much for having me.
Well, we are heading into month end, and this month has turned out to be a stellar one for the equity averages. Rate expectations from the Fed are heightening. So given that we're heading into a new month and we have some event risk coming up, can you tell us the difference between the concept of regular tightening and rate normalization?
Well, a regular tightening would be if the Fed thought that the economy was overheated, they were concerned about runaway inflation that to a level that would be really dysfunctional for the economy. Now, I think what we've got going on pretty much in the intermediate term, maybe the next 12 to 18 months, maybe a little bit longer, is really after 7 years of zero or near zero interest rates, we're getting back to a more normal yield curve structure and a more normal interest rate pattern. So when people say they're not really tightening, they're just normalizing, they're coming off this extremely low interest rate model that was put in after the global financial crisis about 7 years ago for all the right reasons, and I think the market is ready for that to come off.
And I do want to ask you about technicals. Now, we have seen record highs for the Russell, S&P 500, NASDAQ, and the Dow, but I know that you've seen some trends, so can you highlight those trends?
Well, sure. I'll also mention the transports because the transports traded above 9,000 at the end of last week. They had a lot of resistance at the 8,000 level for a few months, and then all of a sudden they get this 11-12% move to 9,000. They've got a ways to go to get to make a new high, but it's very constructive to see them transports catching up with the broader major market averages. Now the Russell went from underperforming to overperforming with about a 14% rally from November 3rd until late last week. It's in new high territory. The S&P is in new high territory, despite the fact that oil is very much of a laggard right now, even a little bit more today with the lack of an OPEC agreement. And the banks have been clearly a major beneficiary of rates going up a little bit and the yield curve steepening, and also the prospect going forward that the regulatory environment for them is going to be not nearly as onerous as it has been for the last 6 to 8 years.
Okay, Tim. Well, thank you so much for joining me on this Tuesday, and thanks for all your insight as always.
Thank you.